Hi guys, welcome back to another video. In this video, we'll talk about Nifty structure. I want to talk about the current wave which is going on, how far it can go, how to trade it, and especially towards the end. For those who watch the entire video, I'll share one simple trick. I'll try to explain this complex concept of contract switching between the big players using the volume analysis. Don't worry, it's not something which is rocket science. I'll explain it in a simple way so that it's easy for you to understand in no 1 second. All right. For those who don't know what volume analysis is and how to do it, you will be easily able to understand it. So let's begin first with the structure of the market. Let me remove this. All right. So higher time frame. We'll start with that. For almost 2 weeks, we have been talking about this, that market is either in an irregular flat structure. This is your A wave, your B wave, C wave, and then we'll start a rally here, right? This is one of the fifth wave, wave 5. This is one of the cases. This is your bullish case. Second case was your bearish case, in case that market made a triangle pattern here. This was the bearish case. Now the question was for us, how do we find out which is going to be correct? So I told you that the only way to find out if what is correct is to wait and watch secondary confirmations. So secondary confirmation, how was that? It was here at this point, correct? In this area, we wanted a secondary confirmation. So I told you how to see it. Considering this is a fast move, a secondary confirmation for a bearish phase will be like this on the downside in this area. All right. Secondary confirmation for a bullish phase. Market will breach this swing high. It will confirm some sort of a wave 5. Simple as that. Right now, what was the issue? Issue here was market started off in a 3-wave pattern, came back down in a 3-wave pattern, and this part also started off in a 3-wave pattern. If you look at your futures chart, I spoke about price distortions happening at these areas. There were more price distortions. All this we have already discussed. I don't want to get into it. First major question I want to ask is, market, tell me how far you can go. Let me go down to a higher time frame. Let me go up to a higher time frame here. First question, how far is the market going to go? What I'm going to do is just apply my Fibonacci expansion tool. I'm going to take this swing low here. If I go down to a smaller time frame, a 1 hour chart, I have taken, for those who are studying the wave analysis, I have taken this swing low here, all right, near 22,348. This is just a secondary conservative count. This is not, let's say, aggressive count. Conservative count as in this is the least possible scenario, least. All right. So we have taken this high here, and this low was 24,473, right? So what I'm going to do is I'm going back to a daily chart. I'll tell you what's happening here exactly. If you look at this point, this consolidation happened in some fourth wave. Now this is nothing but a sideways consolidation pattern. This is an irregular flat pattern. All right. Again, Elliot wave basics and intermediate stage. If you have studied this, this should be very clear for you that this is an irregular flat pattern. Now this pattern, instead of giving us a dip, right, instead of coming down towards 23,900, it went sideways. Why? Reason, it is not in our control. Understand that it's not in our control why market does what it does. There is one explanation regarding retail mindset. If retail was expecting this level to come, maximum retailers expecting this level to come, yes, definitely market has to go into correction, but it will choose to go sideways instead of deep correction. Understood? This is based on the momentum and psychology of retail and the big players. That is why market changes from deep correction to sideways correction. This is a frustration phase. Sideways corrections are always frustration phase. Now, the power in the Elliot wave basics and intermediate stage, I told you the power of this irregular flat setup is what? This is a low risk, high probability setup. Why? Why is this low risk? Because the move after this is guaranteed to be fast. It is guaranteed to be fast. Why is it high probability setup? because as soon as this forms after a trending wave, we know that the same bullish pattern is going to start. So correction happened like this, correct? Previous move was bullish. Next move will also be bullish. High probability this is going to happen, and this is a low risk for us. Now, because the structure was not clear on the higher time frame, we had to wait for secondary confirmation. Simple as that, nothing complicated. Question now, main question, how far can it go? So if this is some fourth wave here, and this is some fifth wave, so what did I teach you in the intermediate stage? That minimum 38%, minimum 38% extension. Now, how do you do extension? Where to mark? Again, those who have studied the intermediate stage, you will understand it. Okay. Till where can we expect it to go? In a decent rally here, all right. And then maximum, it has to go below 27,237. Now I'm talking about very big levels. So because you're on a daily time frame, I'll go down and make it more practical. First thing, first level is 25,528. Now this level is achieved. Keep this in mind, because when we discuss how to trade it, I'll tell you the importance of this. It can collapse, this move can collapse anytime from here. You understood this point? Move can collapse anytime from here. So what I'm going to do is, now I'm going to teach you how to trade this part, how to at least think, how to think as a trader in this kind of a scenario where this up move minimum target is achieved. The up move's minimum target is achieved, but we don't know when it is going to collapse. So how do you plan in this case? So here first we'll start off with your FRVP here. What happened last week? So last week after the weekend video, I had some questions. Many people asked some questions, secondary confirmation and all that. I posted a message on Telegram group. We discussed how to find a key level. We saw a key level there. I gave you key level to follow. This was one. I showed this exact diagram. Let me just mark it for you. FRVP, again, those who have not yet studied FRVP, after this, immediately start studying your FRVP. This is your first important key level. Second important key level from here all the way to here. This is the second key level. Second. These are basically POCs. This is the area of where maximum activity has happened between the big institution players. All right. So these are the key levels where we saw price hold. Now I shared this in the Telegram group. So what was the message with it? It was that this area on Monday evening, I shared Monday afternoon, right? I think somewhere here over 3 o'clock something, I shared this. The idea was, first we wanted what confirmation whether market was going to fall down completely or we are going for a bullish rally as a fifth wave. So Monday, what happened? It came and became an inside range day. It became an inside range day of the Friday's move. What happened was Fridays and Thursday we had a good move here. So point here is that this area was the lower side barrier. This was the upper side barrier. Must be clear. Minor one small level was there. I'll talk about that later. Here, these two zones was the key area where your operators, one of them has to give up. One of them has to give up for the trending move to start. It was time for the trending move because we know on a higher time frame. Let me go zoom out and show you. If I remove this FRVP, it will be even more clear for you. All right. So on a higher time frame, we know that a trending move has to start now because this move is going to start downside or market is going to plan for the upside move. So one of the levels operator has to give up. One of them, those who are fighting between the operators, whatever fight is happening, one of them has to be gone. One of them. So what happened here? Next day, immediately Tuesday, we had the confirmation that this level was broken and market sustained about previous swing high also gone. So many traders got trapped here. Those who were bearish, two kinds of SLs you can keep. Bearish traders, they can keep previous swing highs or even more higher highs, right? So this was one of the stop loss for bears. This was one of the stop loss for bears. This gap gave them confidence. What happened here was this POC level. This POC level was nothing but your one of the entry points, you can say retest points like this for bears. So this is the expected outcome. They assume this is going to happen. One of the levels which market, what did the market maker do? He jumped this entire zone. So once he jumped this entire zone, what happens? There is huge amount of trapped traders here. Understood? Huge amount of trapped traders. These are not retail traders. These are institutional traders who are got trapped here. Higher level. How do I know what is the difference between institutional trader and your retail trader difference of trap? Simple. Market will always come back to this point. You understand? For institutional traders, whenever trap happens, when I've seen this so many times, is that again, these are all my research and my own opinions. So you can always cross verify and do your own research. What I've seen is whenever big players get trapped at any areas, wherever the price goes, it will once come back to, let's say, save them, or it will come to relieve them of their positions, whatever. But again, once it will come back here. So these are nothing but exact POC areas. This was the exact POC level. Previous area of operator activity. Market came back. These are the trap areas. Market came back and then started the next leg. So it was very clear that we had a 38 to 50% zone here. We wanted to see what market does. Big gap down came, and then simply it did not stop. So what you need to do is always, like I told you, if you want to see after a fast move, if you want to see continuation on the downside, wait for 38 to 50% zone, watch it. If market rejects it, only then you can play the downside. What happened here was market, if you take this example of this fast move down, market did not stop at 38 to 50%, it immediately broke it. Right. So this move was finished. Simple. Now you understood logic behind the movement of price. What did we look for? Clarity in how to see the market. Let's discuss the structure now. This entire move is completely moving in a three-way pattern. Why do we need to understand structure? Is to first understand how to trade. Once you understand how to trade, to understand how to trade, we have to understand structure. Once you understand the structure, you will understand easily how to trade this. Now, what did I tell you? First, in the higher time frame, minimum requirement for this wave is finished. Minimum requirement is finished. So what now? If minimum requirement is finished, it can fall back anytime. Understood? Clear. So those who are planning for big bullish bets, it's not possible because logically market can fall back down anytime. Next, if that is the case, what is the structure happening? What is the structure? Because we don't know when it is going to end. Correct? We don't know when it is going to end, where it is going to end. Structure wise, right now, this entire three-wave patterns, from here, it's a single wave. From here, it is a single wave. It's very difficult for me to explain it to those who are not advanced concept members. The advanced concept members know how to verify your multiple time frame, magic EMA, so on and so forth. But not advanced concept members, those who are regular YouTube just viewers. For me to explain it to you is very difficult. So you'll just have to take my word for it. From this part, this is a single wave on a higher time frame of 1 hour chart. This is a single wave. So if this is a single wave and it's very big, what happened to the previous counts? The previous counts, there are two options here with me. Considering GIFT Nifty and your Nifty futures chart, two options. What are the two options? Let me just mark it. It'll be clear for you. Change the color. So first option is, this is your A wave, B wave, C, D, E. All right. Try to understand this. This is one of the possibilities. A wave started here, P wave. This entire move is C. It's very clear that C wave is bigger. In this case, you can see C wave is already bigger. C wave is greater than A wave. So if this is a 3-leg pattern in a wave 5, this is ending diagonal, mostly expanding. Expanding. So what does this mean, expanding? Like this, down move, big up move, down move. Next up move will also be big. Just remove this. All right. So next up move will also be big. A, B, C, D, E. Like this. So this kind of a torturous move is actually, you have seen this before. It is a major trap area for your retailers. I'll show you like the same example where you have seen this just recently, not so far in history. This is the top of September. All right, top of September. This is the exact same pattern. Like this. This will give you extremely high euphoria that market is going to be majorly trending. So this is your A wave, B wave, C, D, E. You have seen this before, exactly near the September high of last year, and then you know what happened, market collapsed. So what happens in this case is, if this is the case, wherever the market started from, wherever the market this wave started from, it will come back for sure, guarantee. All right, it will come back for sure, guarantee, or else minimum 75% retracement. Minimum 75% it will retrace. If it does not come back to starting point, minimum 75% it will retrace. All right. So let's get back to our structure now, and you will see what do I mean by it. Okay, so here, if this is the case and we are already on a higher time frame, we have upper levels. We have completed the upper levels. Minimum requirement is done. Anytime market can collapse. Anytime market can collapse and come back where? To 75% minimum retracement of the full wave, or else it can fully get retraced to 24,500. Understand this logic? This is what, these are the messages I shared in the Telegram group throughout the week. Anytime collapse can come 24,500. If this is the entirely weak structure, this is some sort of a wave 5, all this I've shared it in the Telegram group already. Now, what is the other option we have? The other option I have is just mark this as wave A, entire thing. Then coming weeks, if we start seeing a correction, it'll be wave B. Then entirely as wave C. D and E. This is also possible. It depends on how far this up move wants to go. So what do you have right now? And based on the so far analysis, you have a structure which is going to reverse anytime. All right. First thing you have is one structure can reverse anytime. Reverse anytime. Then fall style will be sharp fall. Sharp fall will come anytime. So how do you trade this is the question now. How do you trade this? Once you know this kind of scenario is going to happen, where movement will be very fast in the trending phase, and then choppy sideways movement will be there for more time. The time consumed for sideways momentum will be more than the next fast leg. Sideways, then again fast. So this will complete your wedge type pattern, diagonal type pattern. So this area is for frustrating and trapping retail traders. This is guarantee. In this scenario, you cannot take confidence swing trades in the market. Deep pockets, I'm not talking about. I'm talking about the regular retail trader. I'm not talking about the people who can manage portfolios and options portfolios separately, delta hedging separately, and all that. I'm talking about those who can just focus on the market based on from the perspective of a retail trader. In this case, you cannot take swing traders, swing positions with confidence of what can happen overnight, because first point, minimum requirement of this up move is finished. anytime it can collapse, anytime it can change, but you don't know when. So this is also a possibility that it can go higher. So first thing you need right now is a dip in the market. You need a dip to come in the market. When this dip comes, the slow nature of this dip, nearly it can take 10 days, 10 sessions, not 10 sessions, 10 days. Let's say, suppose today is month is going to start, will take around 9th or 10th. Till here, if market continues to drop and slow move, then it is very clear, sure, that market is in a form of a bullish move, but it is not completed. And then we'll start the next leg. So in my opinion, if this move continues to go higher, till the mid of July or the end of July, we will continue sub move, slowly breaking structure up and down, if that is the case. If not, if the move will gets completed by mid July, we should complete the entire move and we should start the fall. These are the two options. Continuation means till the July end, we will be bullish, but there will be torturous move for retailers. It'll go up suddenly fast and then sideways fast. Sideways will take more time to go. So that is the possibility. So in this case, how to trade is you have to change your entire game for intraday only. This is the again message I gave you in the Telegram group, that I am planning to change till mid-August at least intraday scalping using the breakfast indicator. Now you can do it as per your wish. Breakfast indicator has today we have your 28th. We have discount date. If you want to, those who want to continue with the monthly subscription, those who have requested, you can contact me by end of the day. Simple intraday scalping. This is what I'm going to plan. Simple, because the reason was anytime fall can come. Structure is not clear. Higher time frame, it's slow, can be fast. Better, what I want to do is I want to capture if any up move which comes. I don't want to lose money if sudden fall comes. If sudden fall comes, I want to take opportunity using breakfast. If up move comes, I'll take opportunity using breakfast indicator again. So direction wise, I'm neutral. Just stick with intraday. Stocks scalping, whatever is there, I'll share it in the Telegram group if I am looking at some stocks. All right. Simple game. This is how you trade an unknown wave which can terminate anytime. Unknown wave as in where it can end, when it can end. That details you don't have. Internal structures are not clear. When you know this, change your entire game to intraday scalping. Systematic traders now. Systematic, this is one of the systematic methods. One of the tricks I have only given to the premium members. I won't disclose it in the public. How you can change between fake signals and real signals, how you can identify them. Here, very simple. Systematic traders will win in this case because this is a gold mine, literally gold mine for option sellers who are systematic. Option seller discretionary will have problem. Systematic traders only will win in this kind of wave. This is where 90% of the retailers are going to lose money again. Why am I saying again? Because this was the first phase. Most dangerous phase, wave 4. Wave 4 and wave B, I think I have told this many videos non-stop, back to back. Wave 4 and wave B are the most dangerous wave. 99% retailers lose money here. 99%. What happens after that? This is a simple trending move, but this is not a simple move now based on the internal structures. This is a complex trending move in the form of a diagonal. So here again, retailers will lose money. What happens here in this kind of cases? They'll plan for okay, now breakout happened. They've missed this rally. I want to participate in the next rally. What happens next? Immediately, market falls down for a correction. Now, what do you think? Okay, now market has turned around. It has gone for a reversal. I have to look for bearish positions. Market starts the next rally higher. So this is going to be choppy for retailers who don't have a systematic system, at least for the next 1.5 months, at least minimum. All right. So this is what I wanted to share with you in the video, the weekly outlook for next week, how to look for it, how to trade it. You cannot predict levels here. Anytime it can change. You can use time analysis if you want to, but here point is that structure is going to be very choppy. Now, for those who have watched so far, my small explanation of what happened on from the level of 25,000 to 600 points rally suddenly, from Wednesday, Thursday. Now Friday was a little dull, but again, 2 days we had more than 500 points rally in the market. How, why, and what happened? First, simple. Look at this chart. What do you see? I can show you that there is just one candlestick in between. This is a candlestick. And those who are watching this part using a mobile phone, it'll be very difficult for you to understand the numbers. So don't focus on numbers. Mobile phones have small screens, so resolution will be a little lesser. Here you can see there are some numbers on the left side. There are some numbers on the right side. What is the difference? This is nothing but your buy side, sell side. This is just basic explanation of a volume footprint. You can study it on your own. I have not yet taught it because what I want to teach is something totally different from what the public data available. All right. So if you want to wait for that, you can wait for it, or you can study it on your own, do your own research. So here in the Telegram group, I've mentioned that I've shared these images many times that price is rising, price candlestick is rising, but somebody is selling here. Heavy selling is happening. Now the logic, I'll explain it to you what actually happened. On the right side is your candlestick chart. All right. Right side candlestick chart. Left side is the volume chart, volume footprint chart. We started from the level of 25,000. All right. So it won't be clear for those again watching in a mobile phone. So I highly recommend you watch it in a either in a monitor or desktop, laptop, or whatever. So these zones where I've marked, all right, this zones here, these are nothing but areas where something suspicious has happened. All right. This is price candlesticks. Let me zoom in here. All right. So right now, what has happened here suspicious is that price gave a big rally in this zone, first zone. On the left side, we are seeing the first zone. All right. On the left side of your screen, we're seeing the first zone. Price gave us a big rally, but in every candle, there is high amounts of selling pressure. High amounts of selling pressure. Those who have watched the operator traps lecture series, for you, it is very clear what is happening. For you, it is very clear what is happening. Here, what happened was market went continuously upwards. So this is the next zone. Here, this is the next zone. All right, this is the next zone. Same thing happened. There is sideways momentum. Heavy selling pressure is happening on all green candles, but price is not falling. All right, no problem. Moving on. All right, so in this case, what happened? Big rally came here in this point. Same thing happened here. What is happening here is that price is moving higher. Selling pressure is coming in each candle. So from the bottom of 25,000, we are now trading around 25,400 level. Every pump or higher move in the market, every green color candle is telling me that something else is happening. This is not real buying in the market. This is not real buying. So the last on Thursday, your expiry day, what happened was last second half, good pump in the market. But in this good pump, what do you see? All red deltas. So delta is nothing but a net buying pressure or net selling pressure, which is happening in that price range. All right. So price range is nothing but a candlestick range. So in every candle, green color candle, there is high amounts of selling. It started all the way from your 25,000 level. So 25,000 level to 25,500 level. Every rally was in actually net selling position. So I did some research, I did some investigation. I saw what happened was the truth is now this is very simple, but I hope you understand it when I say it only once. And there is June and July futures contract. Understood? Very simple. When June and July futures contract is here, we are near the expiry day of June monthly contract. Clear? We are near the expiry of June month. July month is still active. So what happened in this entire case is price was rising, price is going up. July activity futures contract is going up. June month contracts were getting sold. Simple, clear. So price momentum rise was based on the momentum of July month contracts shifted. Now I want to dump. I have already bullish position. I am operator. I am operator from the low of 13th. From 13th low, I have bullish position. Nobody is going to stop me. The last operator was supposed to stop me here. I beat him. I gave a gap up. I cleared him out. I removed him. Remember in the starting, we had option. One of the two operators has to give up. I defeated him. Now the market is in my hands. I want to close it at the highest possible position. I cannot do it in one single candle. Okay. I cannot exit my position in one single candle. So before the expiry and 1 day before the expiry, I have to slowly remove my bullish position. I have to book my profits slowly, because if I do it fast, market will not go higher, it will collapse because that much quantity I have. So I have to do it slowly. So when I do it slowly, I have to do it in small parts. I have to do it in small parts. Simple. Before the expiry on Thursday, I have to do it in small parts. Done. But at the same time, I want it to expire. I want my positions to be at the highest profit. So what do I need to do? I have to take the market higher and I have to close my old positions. How do I take the market higher? Using July month expiry. I'm taking the market higher using July month, your contracts. So what happens? There are algos out there, multi-million-dollar algos. I've told this many times. Movement in FNO is coming first, then later it is coming in spot. This is happening in nanoseconds. You can understand it, but underlying reason for price to go higher is not fundamentals. It's not this thing. It's not nothing. Not based on some stock data. What should actually happen was stocks should trade higher. Stocks should move higher. Some fundamental change based on economy, business, some good outlook, right? Positive for the markets, positive for the economy. That should trigger movement in the market. What is actually happening is FNO positions are triggering movement in the markets. This is again, SEBI is already investigating this. We'll see the outcome of the investigation. I've already made a different video on this based on expiry wars between operators. Right now, it's very clear that July month contracts were being bought. So what algo does is it sees, okay, this is the threshold. Above this, even I have to enter. Second algo will say the same thing. This is the threshold. I want to enter above this. This is movement is coming here. I want to enter above this. What algo cannot counter is because this movement is because somebody is already dumping June month positions. They are dumping June month positions. So entire rally so far is not for some great fundamental reason. It is just for the operator to get out at a higher level, for smart money to get out at a higher level of June month expiry. That's all. This is the simple logic. This is actually, it will go more complicated if you combine price and more deep volume analysis. But right now, in this explanation, I hope you understood in one shot that entire move is actually for June month expiry. It is not for your fundamental reasons. All right. So this is all, guys. In this video, this is what I want to discuss. This is a quick reminder. 28th June today is the discount for a monthly discount date for your breakfast indicator and your advanced concepts. Those who have requested, you can contact me before end of the day. Guide videos for breakfast indicator is totally different for Indian market and global markets. Watch it separately. Advanced concepts, again, those who have studied the Elliot master course, only those people can understand advanced concepts. So I highly recommend, if you have studied that, only then think about proceeding. All right. Contact is given in the description. If you have any queries, definitely contact. Thank you, guys. I'll see you in the next video. Till then, take care and be safe.